Successful trading is this. The bottom line is what I do to get success in trading could be 180 degrees different than what you're going to do. But I'm going to share with you right now with the current market conditions how I had a successful ROI January. Successful for me, probably the best month I've had overall in maybe a couple of years. And the reason was because I followed the rules. I followed my own trade plan template. And I'm going to go through some of the key elements today on this video so we can go through it. So possibly you can learn on your own what your template's going to be, what your trade plan template, how it will work, how it will gain high probability success for you. Now, beginners are going to have to understand you need a lot of hours on the chart. That's just plain and simple. If you want to learn this trade, it's a skill profession, definitely, that you have to learn. And it's taken me years to get to a profitability consistency, years. So maybe you call me a slow learner, but I'm just saying I've been around the markets a long time, but not from a trading perspective, from an investment perspective. So again, we're talking about trading. We're talking about a template for February 2025. So let's get at it. Patience. If I had to say the first primary element that I did better on than 2024 is a consistency for the entire month of patience. How do I know this? Because I journaled it. You should too, because if you do one thing, you want to understand your patience for your trade time model. Remember, for me, time is before price. Wherever price location is going to be, I first need to see, is it in my time model, my trade plan time model? I need patience for this to set up. Second element of patience is, the price action model to actually show up. If it is in the time zone, then is the price action location going to be where I need it to be? So now you've got to have two elements of patience. And it might just be, again, one trade setup. The third part of patience is going to be once you've got the trade in, are you going to have the patience for it to hit your take profit or stop or trim and trade? And a trim and trade and a stop are different for me. A trim and trade might be 3 handles or less. A stop might be 5 to 10 handles. But the point is, if I can't be patient on at least all three of these things together in one combined trade plan, it might mean a high probability that I've got way too much leverage, and that hence the need for trim and trade or a stop. So patience was key in January, and I would say it was one of the key elements for my success. Charts. So you need to definitely have multiple time frames. That's what's helped me. You can't just take one look at a 1 minute and say, there's my setup. So I'm looking at weekly, daily, 4 hour, 1 hour, 2 hour, 15 minute, 5 minute, 1 minute. And it depends on the time of the day, but I need to cycle through it. And on top of the time and price charts, I'll also look at the Keltner-Renko chart for range. I want to look at, is this a premium or discount range? How long is the range duration? So multiple charts helped me in January get a double-digit ROI. And it wasn't just one, it was several charts. And that's key. The second element is going to be the journal daily. It's got to be noting trade actions, not what you thought, but what you did. When did you do it? How much did you do it? What were your emotions? And what was your general state of being on your energy level before, during, and after the trade? I got to tell you, the staple to journaling's really helped me. And I actually have 2 levels of journal. One is the actual outcome of the journal with the actual news catalyst events, and then the outcome on the ROI or the payout or the stop loss, trim and trade. And then the other part is where I go in longhand and I write down with writing in my remarkable e-tablet what exactly I'm doing. and what I'm thinking and how much size I've got and location and what time I did it. And that is definitely very helpful for me because I'm writing it down by hand. I'm not typing it. And it's just something I do daily. Even if I'm not actually pushing the button on the trade, I'm going to do this journal. And I'll even put in what chart I'm looking at, what led me to that, and sometimes I'll screenshot that chart. So that's a third layer, a screen capture of your actual chart you were looking at and then make a note of it. So this is all stuff that helped me greatly in January, and I just did it at a higher level more consistently, and that really helped me. When I looked at my emotions, if they were getting a little bit wonky, it was usually because of maybe I wasn't following the time of day correctly or my sizing. Definitely. It's always about leverage and size sometimes for me to not have patience. So I'm journaling this, I can see it. And then once I've got it, then I can have this patience and I can journal it and I can see the setup's going to happen for me. A lot of times I've got good high probability setups, but I used to bail out too quick because I just had an overarching impatience to get out because I couldn't wait it out. Now the new thing for me is squeezing every little bit of profit out of one trade and having the patience for that, like letting a runner run, really run. Because in these kind of 2025 markets, you can see abrupt changes. So let's go to the next focus. First of all, if you're a beginner and you don't have a lot of experience in trading, you need to get ROI, return on investment momentum. And I would say 6 months to a year. If you're intermediate and above, advanced, few years, and you're just trying to get consistency in your profitability, you need to really measure a full month. That's every day the market's open, you're there, you're showing up, you're watching market action on your trade times. Again, time of day, time of week, and your setups, price location, your stops, your trimming trades, your take profits. You're showing up for all of that. And if you come out at the end of the month with some ROI, then here you are starting a new month in February and you've got some momentum. Now you take that ROI momentum and you look at where can you strengthen it. It doesn't mean follow your trade plan template and never change it. You're going to iterate. You're going to change it and modify it and lean into the strengths and shore up the weaknesses. And that's exactly what I've done with my plan. I found so many little things. If I just fine tune it and tinker with it a little bit, I should have a decent February. I mentioned already letting runners run and then having to stop out and being okay with if I don't get the full run and it stops me out and I'm still in a profit on the trade. But the whole point was that's an example of following my trade plan template and then iterating and modifying it a little bit to make it better for this new month. As far as the other iteration that happened in January was the sizing, the leverage. If we've got a two-way market with abrupt and it's accelerating in abruptness with directional shifts that can be super violent, and the VIX, which is a measure of volatility, is not really showing that much of a I'd rather look at the tick, and I haven't even been looking at that. I've been just watching my fair value gaps, my inverted fair value gaps, and just saying, "Here's the line in the sand, and if we go back and we reprice a certain zone of a certain price imbalance, then boom, we might have a complete new setup that's going to happen." And that happened on Friday. We were going up, up, and then boom, all of a sudden, one tweet happened. Reuters got punched in the face with their news, and the market changed direction 180 degrees, and it just went down. And that's happened a lot in January. It wasn't just the last day. I'm expecting more of the same, and the duration can be changed up too. It could be a day, it could be a week, but these are violent, abrupt directional shifts, which is a two-way market. I need to shore up, follow my trade plan template, keep the ROI momentum I've got from January going into February, iterate, modify, and be aware the market's changed and expect these abrupt and accelerating directional shifts. at least through February to April, okay? Summer might be a whole different thing, but I'm just saying for the next 90 days, this is my expectations. Okay, let's focus on the next slide. I want to make 3 points here. Leverage budget. Okay. If there was one thing that really turned the tide for me in January to get a consistent ROI, money management is all about leverage. And if you have a leverage budget, then let's say, example, 10 micros is your max full boat. And let's say you're comfortable because of this is a two-way market with violent swings with only 2 contracts, 3 contacts average. You might go up to a 6 to 10 contract trade just for the sake of trim and trading or stopping to get back to that average of 2 or 3 contracts. But you need an overriding leverage budget. And of course, the time of day is super important on when you're applying that leverage budget, because let's say it's London, I allocate one kind of leverage budget, and New York Open, Silver Bullet, market on close, all these little different things that I've learned from my mentor ICT on time of day. I'm going to have a different leverage budget depending on the price, location, the time of day. So that gets us back to risk management, trim and trade, stop strategy. A trim and trade is you're trimming and trading around a basic narrative. And the trade narrative for me all January was not going long. And when price went up on spikes where I could locate it on a range chart, on a high time frame chart, then what I would do is I would start to fade. I'm not saying I got the best location every time, but I'd trim and trade. So that means I took more frequent losses in January on my trim and trade, and stop strategy would be more of a 5 to 10 handle stop. If I'm doing my job, I'm going to have more frequent trim and trades and stop strategies. That's one thing that's changed for me in 2025, but it led to an overall better risk management strategy because I have high probability setups that I take. I've got a good win ratio, and I just can't blow up when I do take my stops. I can't blow up with big stops that are going to go blow me out of the water and wipe out most of my profits. That's usually what happened on when I was going back and forth with break even rather than consistently being profit. I'd be profitable, then I'd take a huge hit, then I'd break even, then I'd go back, rinse, return. I've done that for a couple of years. Over the course of a decade, it's taken me a long time to get to these points where I could have a solid risk management of trim and trade, and now adding on a second layer of risk management, which is a better stop strategy, and just cut it and understand I'm following the plan. So there you have it. Risk management is the highest priority, and you could have a very mediocre way of trading, but if you've got pristine and platinum plated pristine risk management, you can do well in this business. And that's something that's probably given me the hardest challenge. And I would say that would be the biggest thing I would teach a beginner, intermediate, and even an advanced trader. If they're having a losing streak, the first thing we do is go to their journal. We'd look at their overall trade template plan, and we'd see what's their normal risk management strategy and why did they come off it? Where did they go wrong? And that's where, again, people get into trouble is they usually have a sound management strategy, but they go away from it. And believe me, I understand it because it happened to me. So firsthand knowledge. If you like what you've seen, if you're new to the channel, welcome. And please subscribe and get the notifications and stay up to date. If you'd like to go into a deeper diver and you'd like one-on-one coaching and you want to check out if it's a right fit, book a discovery call. It's in the description. Take care and aloha. Bye.